Everybody, this is Jim coming to you from Nashville, Tennessee, where I'm going to be here for a few days. So keep your fingers crossed that our chart capturing program will work. And one thing I hate about my laptop is it came with all this junk software installed on it, so all kinds of things are going to be popping up probably as I do this, reminding me to register Norton, reminding me that additional login information may be required here at the hotel, all kinds of junk. So let's make it short and sweet. But before we do, the important thing, as always, this is just my opinion. I am not a licensed financial professional. I'm just a guy that draws lines on charts. This is for educational purposes only, not intended to be used as investment advice. You need to make your own mind up to do what you need to do with your funds based upon your financial situation, your risk tolerance, and so many unknowns that I don't know, that I have no business telling you what to do. All I try to do is find patterns in the chart. So let's get to it. Well, today was a nice up day, and you can see now that this little gray channel that we had right here broke out early on in the day, and that should have, as it did, signal at least a short-term reverse. See, I told you. Go away. It signals at least a short-term reversal, which we got. And I want to show you too, I have repositioned now with this as a bottom. I have positioned a trend line under the bottom of today, the 21st, and the bottoms of the 8th and 9th of May. So now we're looking at this line as a trend line. We couldn't really do that before because we hadn't made that bounce yet. Additionally, if we take this line and roughly snap a parallel to it, we end up with a line that is very close to the past two tops that we've had. So let's keep these lines on the chart and let's see what we might get here. Again, I'll remind you, the S&P has made its minimum expected downside target. We are now bouncing up against this blue line. There was a line that I thought would hold maybe back, but it gave way on the 17th. Let's see if we get up over that. Then if we also get up over this red line, then we could be coming back up to test some of these levels in the 1360, maybe even the mid 1370s, because we haven't really made a strong, solid back test of those levels that broke down. Then we need to take a look and see what's happening, market-wide, to whether we can get a feel as to whether or not this 1295 is a low for a while, or if this is just or if what we're getting here is just an intermediate bounce. But the first thing to do, and I'm going to make this pretty short here because I don't know what kind of connection I've got, how long it's going to take to upload this, but the first thing I would do is let's see if we can make, if the S&P can get over this line that I've just highlighted. If it can do that, then I think the market is signaling to us that we're ready to move up, back up into the mid to mid-high 1300s to maybe test these lines at 1360, 1365, or even this neckline that at the time would be up closer to 1380. So look guys, that is a short and sweet version. I'll spend hopefully a little bit more time on things tomorrow, but my schedule here in Nashville means I got to do it when I can, when I have an opportunity, because I'd rather get something short and sweet to you quickly than having, than uploading at 1 a.m. after I'm through doing my work, because I'm going to be working late nights. So the idea is I'm going to try to do this before I work, if at all possible. So look, that's it for today. A nice bounce. We've now established a trend line down here, I believe, and let's see if we can take this line out up here. If we can, I think the market's may rally for a few more days or maybe even for a week. So let's keep our fingers crossed and see what happens. Look, I appreciate you taking time out of your day to watch this, and best of luck to you in the markets tomorrow.